Welcome to TradeTheMBI.com. This is John. This report is for the 17th, and hopefully everyone had a lovely holiday. We had the Passover and Easter holiday there that left us that little space gap in here. Now we've broken below the ABM green, so we know that we're in a downslide here. Hasn't been too dramatic. I mean, look, when you think about it, there's still quite a few positive extremes all the way from back over here that will need filling in, and that's still a ways to go, pretty much right at the bottom of where the ABM reset is right here. And do we expect it to all happen at once? Probably not. The shakeouts continuing to slide. We ended up with that brief peak where we got back to positive and couldn't hold it. That's always a danger zone when that happens. You usually get a significant dip. We're not quite to the lows. Right back here of 23.17 range. Close. We could visit that. Wouldn't be too horrible. And then likewise for the NASDAQ, slight dip down there. I think this is all pretty moderate given what's going on. We had the euro, slight bounce, but again, we've got elections within a week. They're all over the map with what the claims are. I don't think anyone has any confidence whatsoever in what their projections are at this particular point. So I think that's going to add to the uncertainty, which is always problematic from a euro standpoint. And bonds, that rally is insane, but what are you going to do? That's what the readings have, and there it is. Oil also taking a significant jump. Now, it's really an interesting question because you see more trouble signs from China and other issues. So this isn't about growth as much as they think the supply reduction in the future is going to take place. It doesn't exist at this particular point, so there's a gap between the reality of things. Obviously, summer blends coming through for the West Coast and stuff can have some gasoline impact, but it's probably a little bit more significant than that. So we'll see if that's got things under control, and of course we expected gold to continue its outrageous climb, and it's pretty much doing just that. And here we go. From a 5K standpoint, this is what the day looked like from Thursday, I'm sorry. And I gotta shrink it a little bit more there. So we've had weakness the last couple of days. We came down, we ended up with a nice buy signal that came through there, got right back up to the peaks, couldn't hold it. 13 plus on the orange, and sure enough we reset all the way again. This one didn't produce a whole lot. It was pretty flat to nothing, and then we came down and tried to recreate another one, but that did not do anything. And this becomes a little bit problematic sometimes when you get that soft shoot of the steel above 13.5 when you have the dip and it doesn't quite get anything going. And that becomes a sort of a flat to weak trade. I mean, you end up with, what did I see is you end up with a bunch of choppy where you get plus and then it goes bad and you keep thinking, okay, maybe it's going to catch some strength, but it just doesn't. And we've been pretty consistently below the short algo there, so no change with that at all. It's pretty much followed it quite nicely on each of these different breakdowns. It follows the setup fairly cleanly. So that's where the current flux of things is. I mean, this indication is that we should have opened weak and continue to go weak. So I think that's exactly about where we're at. No change yet. We're about to get a dip down here. So maybe we get a press underneath and we get a new buy here in pre-market. Getting ready to start the trading week, and it may be a little slow as people get back from being away, and that, so we'll see how it plays out. As always, though, trade well. We'll talk to you later.